Alright guys, we're back. Video number 5. Today we're going to go over tips to become qualified to buy a home. So let's dive right into it. Alright, tips to qualify for a home purchase. Improve your credit. Okay? Now this one is vitally important. And not just in real estate. Your credit score is going to have an effect on your life in many different ways. So this is something that if you have bad credit, you're going to have a hard time getting qualified for a home. It's just the reality of it. So this is definitely number one for a reason. You're going to want to improve your credit, and ways to make sure that you're doing that are to always pay your bills on time, number one, and to always chip away at your outstanding balance, okay? And basically the way to do that consistently, like I said, that's the key, is to do this consistently, is to pay more than the minimum each month so that you're really taking a good chunk out of your debt, okay? So very important. Improve your credit. Another thing about this is lenders are always going to check out your debt, okay? And typically lenders want to lend to people with no more than 36% debt to income ratio, okay? So if you're at 40 or 50% debt to income ratio, you may have some trouble getting qualified. So make sure that you're paying that down using the steps I just talked about of paying on time, paying each month, paying more than the minimum, and really cutting down that debt. So that way you become more attractive to lenders and you have a higher probability of getting approved from a lender to purchase a home. So very important, and let's hop into number 2. Okay, number 2. Save for down payment. Another very important step. And as most people know, it's ideal, and this is what most people think you got to do, is to put 20% down. And that is ideal. If you can do it, that's a good way to go. But most of the time, to be honest with you, lenders are looking for buyers and expect buyers to put 3% or more down. Now, if you're doing FHA, it's 3.5% down. But my point is, a lot of times, it's not as high as 20%. I believe I read a study one time that said the average down payment, I think it was only like 10 or 11%, was the average. So that's pretty low, really, when you think about it. But you still want to have a lot of money saved up, because the more you can put down, the more that cuts your costs long term. You know, if you put 3% down, you're going to have mortgage insurance, you're going to have a higher monthly payment, you're going to pay more money over a long period of time by a substantial, very large amount, okay? Whereas if you put 20% down, now that mortgage insurance is either completely off the table or much less, and on top of that, your cost goes way down on your mortgage and mortgage payment monthly and all sorts of things. So the more you can put down, the better. Always want to be sure that you're not biting off more than you can chew, and that you're making a wise decision, both long term but also in the short term. And definitely a good way to do that is the more you have saved and in different accounts and in other investments that you can pull out, the better. You want to have a big net worth going into it, so that way you're a little bit more comfortable and you got a shield in case something happens. So, seek pre-approval. This is one I tell my buyers that I work with constantly, is always make sure that you seek pre-approval and get pre-approved before you even start your house hunt. Okay? Because let me lay out a scenario. You're shopping for homes with me. I'm trying to help you find a home that you want to buy. We find a place, you're absolutely in love with it. I say, okay, go ahead and let's write an offer. All I need from you is blah, 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 and your pre-approval letter so I can include it in our offer. Next thing you know, I find out you're not pre-approved. Now, I would never let it get that far. I would tell you in advance to go do this. But in that scenario, more than likely you're going to lose that house to someone else because they were ready to go, they were pre-approved. They didn't have to wait for that step to make an offer and purchase the home. So make sure when you go to buy, before you even start looking, make sure you do this step, because the worst thing is when a buyer finds a house they're absolutely in love with and they lose out to someone else because they're missing something that the other party has, and that's time. And certainly right now we don't have a lot of time as buyers to get a place. Places are moving pretty fast, so keep that in mind. Be sure to seek pre-approval early, and basically that'll just expedite things and move things faster once you're into the process. So let's move on to number 4. Okay, number 4, shop around to different lenders. This is a pretty important one because, you know, all lenders are going to offer you something a little bit different. One may have a lower interest rate, one may be faster, one may, you know, there's just different things that all of them do. So I always recommend go talk to several lenders. Find the one that fits you, your financial needs, what you want from the house. You got to find one that really fits what you're trying to do, because not everyone is the same, not every transaction is the same. So, you know, the lender that I normally use or have my clients normally use may not be the one that's best for you. So the key is to always go out, make sure you check out a few, do some homework, and just make sure that you find one that really suits your needs and your wants, and go with that one. So that one's pretty simple. That's all I'm going to really get into on that one. So let's dive into number 5. Okay. Number 5, research loan types. So there's a lot of different types of loans, and probably the most common right now is a fixed rate loan that I see. So what I would recommend though is making sure, find out what you want from the property. Is it an investment property? Is it going to be a rental? Is it a short-term place? Is it a long-term place? Just figure out what exactly you want from the home, and then do some research on different loan types. And your agent will help you out with this for sure, but I always think it's good when the client has some pretty good knowledge as well, so they know why their agent's recommending such and such. Or why they're pushing in that direction. There's always a reason, so I think it's good for the client to know these things, and if anything, just for your own self-knowledge, it's good to know about these different loan types and different ways, different benefits and cons of each, so that way you can really make an educated decision on which loan type you want to go with. So keep that in mind. That's about it for number 5. Let's go to number 6. Okay. Number 6, consult a professional. Now, I pretty much already said this in number 5, but it's important, I think, to consult a professional, whether it's a lender or a bank or a mortgage person or an agent. I think it's important to make sure that you're surrounded with good, smart people, so that way, you know, you have a good team behind you. You know you're not going to get taken advantage of, and that way, really, it'll bring your confidence up and make sure you're making the right moves by working with a professional. So usually an agent will have like a team that they work with that they can kind of recommend that you work with, but like I said, it's always good to shop around and make sure that you're making the best decision for you. But it's very hard to do these things by yourself, and it really ups your chance of making a mistake. So consult a professional, and that'll limit your chances of something imploding or going wrong. So anyways, guys, let's move on to the next one. Okay, number 7, improve FICO score. Now, FICO only measures your ability to pay back a loan. So earlier on number 1, we talked about credit and the importance of paying back more than the minimum every month and being consistent and paying down that debt. If you're doing those principles to grow your credit and you're doing it each month and you're being consistent, your FICO score should be pretty good. But that's something you definitely want to check out. Make sure you're solid there. And if you're not, make sure that you're taking the necessary steps to improve your FICO score. And like I said, if you're improving your credit score and you're following those steps, you're probably doing all right. But be sure to double check and make sure you're on the right course. Okay, number 8, increase household income. Income plays a big factor in if you'll be approved or not. Typically, they want your mortgage to be no more than 25% of your household income each month. Okay, so if you're getting a promotion, or if there's a new job that pays more, or if you want to get a second job or like start a business at home, whatever it may be to kind of amplify your earnings, that's highly recommended. That's going to make you more attractive to lenders for you to get approved, no question about it. So this applies to you if you're single or if you're married or whatever it may be. The more money coming into your household, the better you're going to look to lenders. So put some emphasis on this one, focus on this one, and let's move on to the next one. Okay, yeah, I realize that this one, stick with one employer, kind of contradicts what I said in the last one. But basically what this one means is lenders want to see consistency. If you're hopping around jobs every 3 months, you might have a problem. They don't look at you as someone who's stable and they can really trust to pay back each month, right? So it's recommended that you stick with your employer for at least 2 years, at every employer at least 2 years. So this way they see that you got stability, and maybe you're only moving because there's more pay over here or more benefits over here, or you moved, whatever it may be. But just be sure you're being consistent, you're not jumping around too much, and you should be good to go. So that's an important one though. Don't overlook that one. Okay. Negotiate a purchase price under the appraised value. This one is major key right here. And the reason why is if I'm a lender and you want to buy a house that's appraised at $550 and you get an accepted offer at $500, for me as a lender, that's $50,000 of equity that I see right off the bat. That makes this an extremely attractive purchase for me as a lender, okay? So basically, just make sure you got an agent who is really going to go out and negotiate a good price for you, okay? That's key. That's key. That'll not only help you get a place at a better price, but it's going to help you get approved for sure. If you're doing the other steps and you don't have terrible credit or a terrible FICO score, or as long as you're not violating all those other steps and principles, this is kind of the cream on the cake there, because this is majorly important. This is what's going to lock you in. If that price is over top the appraised value or at the appraised value, that lender is going to take a second look. They're going to take some time and make sure that things map out. But if they have $50,000 of equity right off the bat, you're looking pretty solid. So keep all these tips in mind. Tips to qualify for a home purchase. This is video number 5. Really want to thank y'all for watching. My email is james@judsonrealestate.net. I'll put that in the description box below. My Instagram is @JamesVisser. Again, it'll be in the description box. And Facebook.com/JamesVSSR on Facebook. So anyways, guys, thank you very much for watching. If you've liked any of the 5 videos that I've done previously, feel free to subscribe to my channel, throw a like on all the videos, because that's going to bump me up in the feeds. And any suggestions, message them to me, and let's keep learning, keep getting better, and have a good day.